Hello, everyone, and welcome back to the Traders Mind Chat live show. We have some great stuff planned for you today, namely backtesting and how to do it the easy way. But before we get into that, if you would be so kind as to hit the like button, drop a comment down below to show your support, and share this out with your community, that will help get this message out. And it's super important because backtesting is the thing that if you are newer to this game of trading, it's going to help speed up your learning curve so much faster. If you're somebody that is a seasoned trader or has some experience trading, this is the thing that's going to help get you from where you're at to where you want to go. It's going to help get you to that next level. So definitely smash that like button and spread the word because we've got some real special stuff planned for you today. Now, for this topic here, for backtesting, we're going to do backtesting. There's a lot of ways to do backtesting. We're not going to do anything super complicated here. It's going to be like heck, like I'm able to understand backtesting. It took me forever. Like just the initial notion of backtesting to me was just like boring as anything. But no, well, we're not going to do that. We're going to make it fun. We're going to make it easy, and yeah, that let's just jump into it. There's going to be two major things that we'll be discussing during today's live stream. The first with backtesting, it's going to be about data collection. Then we're going to talk about planning. Both of those things are going to be super important when it comes to backtesting. And again, we're not going to use any kind of complicated software or coding or any of that stuff. Very simple, free ways that you could start backtesting right now. So also, as you have questions, go ahead, type them into the chat. This is meant to be super interactive. I love interacting with you guys. So the moment that you have any kind of a comment or a question or whatever it is, go ahead, type it into the chat for all of you that are here and watching live. And for everybody that's watching this later on as the recording, yeah, put comments down below too, because I read all of them. All right. So, who do we have here? Michael's with us again. Welcome, Michael, playing defense, defense, defense. Yeah, indeed. And you know what? In backtesting is a great way for us to actively play defense because there's so much great information that we could get. Like, we don't have to go and lose money uh, because, well, we don't have a plan, but that's like an active way to play defense. Do the back testing first, see what works, see what doesn't work, see what can work, and then go off and implement it. So anyway, back testing made easy. All right, well, let me share my screen over here. So share my screen. And let's get started. Oh, yeah. And by the way, I just sent out some emails to people about this course here, the Building Your Mindset of Steel. This is a free course that I poured my heart and soul into. If you have not already signed up for this, I definitely encourage you to go check that out later on. But for right now, back testing. All right, I'm just going to come up here and grab this backtesting template that I created. The members have it, but you can create this yourself in Google Sheets. I'm just going to open this up over here in Excel. Makes life a little bit easier. But yes, Google Sheets is a great way to do backtesting. Like, it just starts out blank spreadsheet, fill in cells, makes life super duper easy for you, right? So that's really your first step. Well, when we're talking about backtesting and we're talking about data collection, you're going to want to use some kind of a spreadsheet, like, I know that there's other ways that you could backtest in this live stream. We're just talking about doing it the simple way, doing it the easy way. The simplest, easiest way for you to start backtesting is to just open up a Google sheet it's free to anybody. So if you are a Mac user, if you are a Windows user, whatever kind of PC you have access to, Google Sheets is free. So go open up an account, use your Google Sheets. So after that, you're going to want to start to think through the different types of data that you want to collect. And I know that I've got a whole bunch of stuff up here. Well, why don't I make this a little bit bigger? Zoom in a bit. Can you guys see this okay? Type into the chat. Let me know if you're able to see this. I have a bunch of stuff on the sheet already, but we'll no, we'll walk through each thing. Let me know if you're able to see this okay. So right here, right, like the way that I started back testing with this was to that I took my journal, right? I took my trading journal. I keep a my trading journal just in Google Sheets. If you've seen some of the other live streams, you've seen some of my trading journal, and it's just yeah, it's kept in a Google Sheet. So one of the reasons why is because it's super duper flexible, right? And one of the things when it comes to back testing is that I believe in collecting as much data as I can. As we are going through the backtesting process, we can start to see like what data is good, what data is not good. Maybe we could eliminate a column, but it's better to go bigger, cast a wider net first than to start off with just a little bit. And one of the reasons why too I really like using Google Sheets is because if later on as you gain more experience you're like, oh, you know what, like I really would love to start tracking X, then you know what you could do, you just come up here and you right click and you say insert a column and there it is. You know, like it's literally that simple. So Jeff and Ryan, glad thank you for commenting that this is nice and clear. Appreciate it. Yeah. So some of the things that you're going to want to track, right? Like you see over here already, like you have some ticker symbols. You have the date that you would enter. Uh, right. Like maybe you're tracking the setup. I think tracking your setup, your whatever your setup is important. Um, you can see like I've got a pretty wide variety of things that I'm doing for myself, but I've been trading for how long am I trading for now? I think 24 years. Today's my birthday, by the way. So, yeah, like trading for 24 years, dating myself, going back to like 18. But yeah, like there's a lot of different types of setups that I like to trade. Um, you could put in whatever makes sense to you. Like if you're trading pullbacks, if you're trading some kind of a range breakout, if you're trading options, whatever it is, what's your entry mechanism, and you're going to want to track that for each individual trade. Of course, where you enter. Um, this is you might want to track where the market was when you started to enter. Maybe you don't want to have that one. I like it. The market condition too, right? Like so the way that I track market conditions now, right? And so this is from last year. This spreadsheet that I made. Since then, too, like there's other things that I've further enhanced, right? Like so, for example, the market conditions. Like I've moved from something that's like this with like uptrend choppy, just like more descriptive, to something that's like, okay, is it a green condition, is it a yellow condition, or is it a red condition, right? So kind of like a traffic signal kind of thing, and then having separately what that means, right? So those kind of things are good to keep track of. But super duper basic. Have your tick, start with your ticker, have your entry date. The setup is going to be great. The price that you're getting in, and the price where you're getting out too. some of these other things in here too. Is everybody following along? Are you guys? Uh, am I making sense so far? We could go through each one of these uh, each one of these headings and start to say why each one of them. Um, for meat, yes, I am a swing trader. So my typical holding period for swing trades tends to be about 20 days, 20 days or so, 21 days. Um, since in this market, it's been fantastic. So I've held my biggest winners for about a month at this point. But yeah, like on average, I'd say my holding period is probably around 20, 21 days for winning trade. So yeah, we're collecting all this data. So TP price, that's the target price, the stop loss price, how much we're going to risk. Um, I like to fill in too, like both based on a percentage basis as well as a dollar basis. And I just plugged in a dummy amount on this, right? Because it's a back testing sheet. So I started out with 100,000. So that way it would be nice round number to start out with. And so we're tracking all this different stuff. Um, at the time, I was looking at different ways to manage my stops, so trailing stops, back stops, selling at different profit targets. Well, we could get into all that too. So if you guys have questions about this stuff, about specifics like, well, what's an R multiple? Well, like go ahead, type that into the chat, and we'll talk about that too. But the main idea here is in the data collection and what types of data do you want to collect. The main things that you're going to be collecting are up here, right? Like, so you're going to have your starting capital, you're going to have the thing that you're trading, right? So if you're trading stocks, if we have some forex traders in the house, if we have some crypto traders in the house, right? Like whatever the instrument is, you're going to be putting that. You're going to be putting your entry date, the setup price, market condition is good. Uh, your profit targets, your stop loss, how much you're risking, all of that stuff. And that's going to be how you're going to start to collect your data. Now, another thing too is if you already have a trading journal and if you already have a trading journal spreadsheet, you're a little bit ahead of the game because you'll be able to take that data, export it, and put it into a new sheet and start to see different things and start to test for different types of ideas. If you are a newer trader and or if you're somebody that hasn't started journaling just yet and you want to start testing out a new idea, you could go and say, yeah, you know what, like let's look at some charts, right? Like let's see, do I have my charts open somewhere? Like pop open trading view. I thought I had it open, but I must have closed it. So you could go to your whatever charting platform you do, and you could start like turn off all the annotations and say, yeah, you know what? Where would I have entered AMD, for example, right? Like if you see this is an entry down here, well, let's say that like it price came down and started to form this double bottom, and maybe this is an early entry as it's retaking the 50-day moving average. Maybe you're testing that as your entry, and so you would come back over to your spreadsheet and log AMD and saying that it's breaking through the 50-day moving average, and here's your entry price and where you would place your stop, right? So it doesn't necessarily have to be trades that you've already taken. I personally like to back test on trades that I've already taken because that part of the work is already done. I already know that this is a what I considered, at least at the time, to be an A plus trade or at least like a quality trade that I wanted to take my real money and put it into. So then when I'm going back and I'm starting to test things, and now we're starting to get into the next part of this about planning, then I could start to say, you know what? I took these trades. What happens if I manage them in a different way? Right. Um, Before we get into the deep into the planning part, though, I saw some other questions come in. Uh, Mead is asking, "What are backstops?" That's a fantastic question, and I'm glad that you asked it. So, backstops, right? So let me turn on my annotations here, and let me know if the annotations make sense. I like to mark up my charts quite a bit. Our members know like exactly what the stuff is, but like if you've never seen it before, it could be a little bit confusing because yeah, there is a bunch of stuff on here. But basically, this is a trade that I'm in right now, AMD. And when I started the position, I bought it above the high of this outside positive reversal day. So what I saw here was a price broke out of this double bottom, it ran up, and then it formed a little bit of a handle, and it shook out below the low. It shook out below the 10 EMA as well, had a nice positive reversal on the day, closing at the high. So I thought that that created a very nice reward to risk entry in a stock that was already trending, and the group was amazing, and there were a bunch of other stuff that I liked about it. Anyhow, so I entered right here, right? So this uh red and green shaded area is shading, well, like that gray line, that thin gray line, if you could see it like right over here. That's where I entered. The red shaded area is where it starts to move against me, and so that would be a loss. But at the end of the red, that's where my stop loss is. So my initial stop was 117.90. Um, Today, AMD hit my first profit target. And so I like to sell into strength. When I make one times the amount that I risk, well, whatever the amount happens to be. In this case, uh, my initial risk was 6.5% on the position. So price went up 6.5%. I'm taking a little bit off. And also, when I make one times my risk, I also like to move a portion of what I'm calling a backstop up, right? So that way I'm locking in more profit without selling anything or taking more money off the table. So I raised a portion of it, and I'm calling this a backstop. So that way, if price should happen to fall back in, I'm stopped out over here, right? Because it should not do that if it's going to continue being a leader. Um, that's in a nutshell. That's what a backstop is. It's the simply raising your stop loss. So, um, anyhow, long-winded answer to yeah, relatively straightforward question, but hopefully it all makes sense. Question from Michael: How do you feel about the 10 EMA on the daily for entry with 5 EMA weekly support? It depends a lot on the context. Um, Yeah, it definitely depends a lot on the context. Maybe if you could type in and give me some examples of a trade that you're thinking about, well, we could analyze it together, and we'll do that towards the end too. At the end of every single live stream, I always like to leave a little bit of time for some open Q&A where you could just we could talk about anything. Like, you guys are here. I'm grateful for you guys being here, and so I want to do all that I can to help. So we'll do that part at the end. All right. So planning for back testing, right? So when you are thinking about your back test, right? So you are collecting data. You're collecting data all the time, and hopefully, I've encouraged you to if you haven't already done so, to start journaling your trades. I can't stress how helpful it is, how much of a game changer it is. It's one of the reasons why I'm here right now instead of in some crummy office somewhere doing a job that I hate. Right? Like, yes, it took time to be able to have enough of uh, that fu money, if you will. But yeah, over time, trading can do that for you. And one of the reasons why I was in that position is because I was journaling, I was back testing. I was starting to see like, oh, like where I was making mistakes, how to correct those mistakes, making fewer mistakes, making less costly mistakes, uh, finding ways to lock in more gains. All these things can be achieved through journaling, through back testing. And so let's talk about the planning aspects of backtesting. So when you are starting to think about, well, what do I want to test for? Right? Like, well, what do I want to test for? Uh, well, what could make a trade better? Or how can I, right? Like a part of it is thinking about the types of questions we want to answer for ourselves. Like, well, what types of questions? What? Let me ask you guys. Right? Like, what are some of the questions that you have about your trading? Right? Like, well, what are some of the questions that you'd like to be answered about your trading? Like often people say like, "How long should I hold a winner?" Right? Well, when should when should I sell? Right? Like that's often a great question to ask. When should I sell? There's another really good uh, thing that I'd like to show you guys, um, which actually is inside a Google sheet. Um, this is another thing that our members have. Like this spreadsheet, everybody gets has all my trades in it, current trades, current plans, all that stuff. Let me make this a bit larger for you guys to see. So let me zoom in. Yeah, 150 should be good. And one of the stats that's really good to track is this here, right? And this is very new for me, like new as of like the middle of the year. So let me scroll down a bit so you can see some actual data in here. Um, so uh, this up here, the whoops, the high water mark and the low water mark. Very interesting things to start to track in your trades. The reason why, right? And this is where, like I'm very curious too. Like once I have like even more data, and so, oh, that's another good question to ask yourself too, right? Like, how much data is enough data where you could start to rely on well some of your findings. Uh, in general, you'd want to have 100 trades, right? Like that sounds like a lot. If you get to say somewhere between like 30 to 50, I personally I feel like that's probably enough to rule out a strategy. If like you're getting really crummy results, right? Like you don't have to go to 100 to say like, oh yeah, this strategy I was testing, it's just not going to work. But if you have solid results at 30, then it's like, okay, let's keep on doing the test. Then you collect 50, then you get to 75, then you get to 100, and then when you get to 100, that's where you have robust data where you could look at that and it's starting to become more reliable. That's the main idea. Anyhow, so with this high watermark and low watermark, part of what that's going to help us find out is like when you're in a trade, like so let's say you're in this trade, uh, part of what it's going to answer is what's the highest price that uh, price achieved while you were in this idea, right? Like so let's say price continues to run up and then it falls right back in, right? Or you know what? Here's an even better example. SI, right? Like, so this is a trade that I started right back here, right? Like on November 1st. Like, couldn't ask for a better entry and move out of a trade, right? Like this thing just pole vaulted and ran up. What is that? Um, 40%, right? So on this one, on SI, the currently the high water mark is $222.49. That's the highest price that it's gotten to, right? So you could also see like along the way, I like to scale out of bits and pieces of my position, so I'm locking in gains as it goes. Uh, but let's say that's the highest price it gets to. And then tomorrow, let's say it gaps down and it stops me out of the last bit of my shares. So, what this high watermark and low watermark can help me figure out too is when should I start to consider just cashing out of a position altogether? Right? When should I start to look to cash out of a position altogether? And the reason why is because if I'm looking at all this in aggregate, what it will tell me is, oh, when you have 25% on average. That's about as high on average as it goes. Great. So that's one thing for me to start to consider. But we don't want to just take averages, right? Because it's in the outliers that we could really make a lot of money and make like significant life changing money. So another thing to consider is, well, taking a look at just the winning trades. What are some of the biggest high watermarks, right? Like on a percentage basis, on an R multiple basis, and then from there, like if I could go back and say, oh well, the highest for me, let's just say that the highest is 3R, and right now this is at what is that? This is at a 5R trade. I already know that this is. On the outer edge of, what I've made. In fact, like, this might be the best trade that I've ever had, right? Like, just giving, for instances here, like, just talking. Um, if that's the case, then it would make even more sense for me to start to take a little bit more off, so that way I'm not giving more back. It's letting me know, like on a percentage basis, on a statistical basis, where is this in the realm of outliers? This is how this stuff, right? Like the back testing that could be like so numbingly boring, right? Like where yeah, like you don't want to do it, but like it's exciting, and this is the reason why, because it could produce life changing finances for you, where like you could dig into the data, start to learn this game so much better, and like seriously, like oh my god, like it's like just the fun of it, right? Like it just makes it like, uh, could you tell that I'm passionate about this stuff? I'm not sure if it comes across. Anyway, yeah, that's the gist of backtesting and making it easy. Like it's not. It doesn't need to be more complicated than that. It's starting with your spreadsheet. It's going through, and it is. Um, Collecting your data, and then after that it is figuring out what types of things do I want to test. And again, do it in a spreadsheet because it's going to be the most flexible thing for you, and if you need help with any of it, I'm here. So all that said, let's open it up for some questions. Open up the open Q&A part of this. Let's go through and see. Um, so Michael was looking at AMD from 1011. So let's go back. Got so many windows open. All right, so let's go back to AMD. Michael is in from 10:11. So you are in uh, from right here. Wow. Great. So we're gonna just uh, put in so Michael Thomas in right here. Right. So you're in on that day. Perfect. And you were saying, how do you feel about the 10 EMA on the daily for entry with 5 EMA weekly support? And you also go on to say that I don't trade stocks with enough data on monthly charts. I feel like they are fairly new. Anything can happen. All right, so that's a separate question, I think. But as far as the 10 EMA on the daily for entry, so down here, right, like down here, I think that's fantastic, right? Like, so you got in right at it. Do you see that dotted line right there? That's that first layer of potential resistance, right? When it's coming back through that 10-week line. So getting in right around there is perfect. And if you're getting in on this day here on 10:11, then it's starting to come above the 50. It got rejected, but you have that a whole mess of moving averages right there, right? So you've got the 21 EMA, you've got the 10 EMA, you even have the 5 EMA all bunched up like that. And that's a really solid area of potential support where price is either going to move or it's not. And if it doesn't, you have a very clear spot to cut your loss and move on. And it could end up being a very high reward to low risk trade. Now, the probability of it, maybe it works, maybe it doesn't work, but because the reward is so much, can dramatically outweigh the risk, right? So let's say we all got in right around here, right? And I'll just put that as the entry price, have an approximation to where price is at right now. You're looking at a 9R trade. So you just made 9 times your money. So well done, Michael. Uh, this is yeah, well, like that's a fantastic trade. That's a fantastic entry. As far as um, entering just based off of the 10 EMA, the way that I prefer to enter trades is to have multiple layers of confluence for the trade. So here's what I mean. Let me minimize this, minimize uh, this over here, or yeah, well, we're done with this. Um, could close that. Wow, I've got a lot of stuff opened here. Um, uh, but yeah, come back to the website, the marawealth.com website. What we can do is come over uh, to this right here. So my elite membership. So this is something that the elite members have. Um, so you would click on this tool, the trade gauntlet. And one of the things that I like to do, like I'll go through the trades that I'm really interested in and make it run the gauntlet, right? Like that's where the name came from. Part of it is deep dive into the setup itself. Like does the pattern have all the different things that I like? Then looking at the layers of confluences around the target, around support, and around the entry. And the more, the better. The tighter, the better. And it's really a factor of all these things put together that say, do I take this trade or do I not take this trade? Is this an A level trade, a B level trade, or a C level trade? And exactly how much money am I going to risk on this trade? So all those things get factored in based on this, and yeah, well, like mm, that's what we're doing every weekend. Yeah, so the next deep dive, the next mastermind is this Saturday for anybody that's interested in coming to that. It's part of the elite membership. Let's see. What other questions do we have? What are the questions that we have? Um, Yeah, before Michael had wrote, I don't trade stocks with enough data on monthly charts. I feel like they are fairly new. Anything can happen. Um, yeah, like so. I feel as though monthly charts are good to keep into perspective, right? Like so, if you are a swing trader, uh, it's a good idea to just keep them on. Uh, like I like to keep it like this, right? And just going to take that off now, and I'll take off the annotation so it's a little bit cleaner. But in looking at the charts like this, uh, I like to keep a monthly chart open, a weekly chart, a daily chart, and then a 30-minute. And they each have a different purpose, right? So the monthly chart is keeping us in tune with the much longer term trend. Like how long has this thing been running? Is there any kind of major overhead resistance that we might be coming into, like back here, right? When we were looking at October. Uh, 2018 to when it finally broke out in November 2019, right? So that's a year. Depending on how zoomed in you are on your charts, you might not even see that. Good idea to keep that up there for yourself. Then looking at the weekly charts, a lot of the work that I do really starts on the weekly time frames because it's those longer consolidations that are 4, 5, 6, 7 weeks long, longer than that. That's where a lot of the bigger moves tend to come from. More of the sustainable moves tend to come from consolidations that are that length of time. So I'll look at that and then I'll drill into the daily time frame to see like, okay, where am I going to enter? Where am I going to set my stop loss? Is there more accumulation, a distribution on this? Like what's going on, right? Well, what's going on with the price? What's going on with the all the buying and selling and all that stuff? Is it a leader? And then I'll really fine tune down on the 30 minutes. But yeah, like keeping all of it in perspective, those four are super helpful to me. What other questions do we have? What are the questions? This is the open Q&A portion of today's live stream. So have a bunch of people joining us. Saw some people coming in, coming out. So if you're new here, welcome. Special birthday edition. So fire your questions away. I'm just going to take a sip of water while I wait for some more questions to come in. If you don't, let's see. Well, what else? What other questions do we have? While you guys are typing in your questions too, again, for those of you that have joined a little bit later, there's a brand new free course right here on marrowwealth.com, Mindset of Steel. This course, yes, it's free. Yes, it's a game changer, and you'll be shocked at the level of quality. Like I probably could be charging a couple of $100 for this course. I'm not because mindset's the most important thing for traders to be able to cultivate. And just being on social media, looking at different things, like there's so much. Like I hate to be negative, but there's like a lot of junk out there. Well, like emotions are not the enemy, right? Like I heard that yesterday on somewhere on Twitter, and it bothered me because emotions are not the enemy. We all have emotions. Like everything in life is meant to serve us somehow, right? It's a matter of our perspective, and if we're able to ask the question, "How is this serving me?" It's much better than thinking that it's against you. So your emotions, how are they serving me? Right? Like great question to ask yourself. One of the many questions inside the Mindset of Steel course. And there's 6 lessons, 6 video lessons in there. Again, just go check out the course. It's free. No gimmicks, no strings attached. Just go check it out right there on marrowwealth.com. Question from Meat. Is 10 EMA good to use as a trailing stop loss? The answer is maybe. It often depends, right? So, uh, one of the things that I like to do when I'm in a trade is uh, I'll track the different moving averages and uh, which one is being respected, which one is the best guardrail, right? Like, so you might hear, oh, Ryan says that he's signing up for the course now. Awesome. Thank you, Ryan. Uh, One of the things that you'll see in price is that certain moving averages might act as a guardrail. So for right now, you might say, like, there's a strong argument. Oh, the 5 EMA is acting as a guardrail. So if price should close below the 5 EMA, depending on your time frame, of course, that maybe you should start to scale out of some, or that you should expect a short-term consolidation like this. I'm looking at this, and I would anticipate close below the 5 EMA, a close below the 10 EMA, uh, in this instance, would be a little bit of a change in character, right? Because you see how over here, when price broke above the 50 and all that, it starts running, it comes back in, it dips below the 10 EMA, but it rallies and closes above it. That's why one of the things that here's another thing that I'm telling members too. Now, one of the things that I like to do and how I prepare every morning is to come up with 15, right? Like, sounds like insane, but 15 different scenarios for each trade. In fact, I'll show you my handwritten chicken scratch. Bear with me for just a second, and you can see if, yeah, actually, yeah, here's AMD, right? And how do I zoom in a bit? Yeah, so some of what I do every morning, right? Pop this open, starts with an affirmation. The affirmation that I write for myself every morning is, the market is an infinite stream of opportunity. Covers so many things. I just love that. The market is an infinite stream of opportunity. If that's true, right? And you need to you can't just take like any affirmation. Like, you could have one that you want to believe, but you want to start to build a belief, right? Like I almost look at beliefs kind of like seeds, like plants. Like, yeah, like you could plant a seed, and maybe like it starts to grow, but over time, like you get like a really strong belief in something, like over time. So, well, with this here, right? The market is an infinite stream of opportunity. It covers so much, right? Like, so if the market is an infinite stream of opportunity, I should follow my plan, right? Well, like, why shouldn't I follow my plan? But like, it's an infinite stream of opportunity. If the plan is wrong, right, or if I make a mistake, then great. I'll just go and try another one. The way to ultimately win in the market, right? Like, to win consistently, to win long term, is to consistently follow your plan. So if it's true that it's an infinite stream of opportunity, I shouldn't be worried if I take a loss. I shouldn't be worried if I make a mistake, right? Like, because there's going to be like more and more and more and more opportunities. So like, just follow your plan. Great. Then I'll go and I'll start planning out every trade that I have, right? So right now I have a bunch of positions open. There's 4 here. Um, there's 6 on another one, right? So 10 open positions altogether. Let's talk about AMD, because that's where well, we've been talking a lot about AMD. So you can see, like, what happens if price rockets up, right? Well, we'll have different answers if price closes at the high, if it closes in the middle of its range, or if it closes at the low of its range, right? So it's 5 different scenarios: rockets up, moves sideways, drifts down, or rockets down, and each position where it might close at in the close to the high, somewhere in the middle, and down at the bottom. So for AMD, you can see that in most cases, the answer that I have right now is to sit. And it's really only if it closes at the low, if it drifts down and it's below the 5 EMA, then I'll look to sell 10% today, right? If it rocketed down, then I would sell half of my position below the 10 EMA. Um, Given what price is doing as of 2:45 Eastern time, right? So about a little over an hour to go. It's unlikely that either one of those scenarios will happen, but anything's possible. In thinking through this stuff ahead of time makes life a lot more easier too. So much is in the preparation, so much is in the planning. Let me see. Any other questions that you guys have? Any other questions? Thank you so much, Meet, for that. And Ryan, thank you so much for going and signing up for that Mindset of Steel course. Again, like that Mindset of Steel course is going to be a game changer. It's a just writing the course was a game changer, and like this is the type of stuff too that led to me being able to have enough consistency, enough funds to eventually have enough of an account to have that FU money to leave the day job, come do this full time. And I've been doing this full time now for the past 3 years. Mindset of Steel course is free right now, so go get it. All right. So, anything else? Anything else? Next week, I'm planning to speak to Larry Tentarelli, another friend of the show. Had him on the channel. Believe it was earlier this year. You could go and look on YouTube and look up that interview. Fantastic guy. Lots of great insights. He's a bit longer term. So trading the same kind of stuff, the same kind of growth stocks, the same, if you're familiar with Investors Business Daily and Can Slim, that style, those types of stocks, we're all trading the same kinds of stuff. He's a bit longer term in nature, so it'll be interesting to gain a little bit more of his insights, given where the market is at right now. I love talking to all types of people, gaining different insights. It's kind of like the Bruce Lee philosophy of Jeet Kune Do, where you study everything, you take the things that work for you, and you just leave the rest behind. That's what's worked for me. That's what's worked for this, and that's what can really and ultimately work for you guys too. Learn what you can, customize it for yourself, and that will be the big game changer. But yeah, it looks like that's it for questions. So I'd like to come over here. All right, cool. We're set. So I'd like to say thank you all so much for joining me today. It's been great. If you come up with other questions too, again, drop them into the comments. If you're watching the recording, shoot me an email. Go to marwealth.com, go to the contact section, get a hold of me. I'm an easy guy to get a hold of. Twitter, StockTwits, all these different places. Yeah, and glad to help you along your trading journey. Again, thank you so much, and I'll see you next week. Take care, everybody. Have a great weekend. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.